Hello, my name is Ira Smith, President of Ira Smith Trustee and Receiver, Inc. First, the Ira Smith team hopes that you and your family remain safe, healthy, and secure during this coronavirus pandemic. I want to assure you that Ira Smith Trustee and Receiver, Inc. is fully operational. Both Brandon Smith and myself are available at any time by email, telephone, or video meeting to answer any questions that you may have. So send us an email, give us a phone call. We would love to hear from you. Today's Brandon's blog is about why closing a business does not necessarily mean that the company has to go bankrupt. I hope you can watch until the end of this video because I know you will get value from it. Many times when we're consulted by an entrepreneur about closing down their business, an actual bankruptcy filing may not make sense. First, we look for every opportunity to restructure a company and avoid bankruptcy. But if the company has to close down, bankruptcy doesn't always make sense. Let me explain. For example, the company may not have any free assets. Most businesses in Canada are financed through bank loans. The bank takes security on the assets. When a business is failing, more often than not, the value under liquidation of the assets is less than the amount owing on the secured loan to the bank. The company may also be behind in unremitted source deductions. Whether or not there's a bankruptcy, unremitted source deductions is a trust claim against the assets ahead of the bank. So if the bank security is good and the assets are worth less than what the bank is owed, and there may even be a trust claim coming ahead of the bank, then there's nothing there for the unsecured creditors. And bankruptcy is a remedy for unsecured creditors. So, what's the entrepreneur to do? What we advise people is, first, go speak with your banker, see what they can do for you, tell them that there isn't enough cash flow for the company to go forward, you can't make the rent payment the following month, and if there's nothing the bank can do for you, you're going to drop off the keys and you'll cooperate with the bank to sell off the assets. More often than not, the entrepreneur has personally guaranteed the bank loan and maybe even personally guaranteed the premises lease for the company. In that case, we tell the entrepreneur, once all the dust settles with the company and the bank makes demand on you for the shortfall, and you know the landlord is making demand on you, come back and see us and we'll deal with you on your personal debt situation. In that case, there's no point for the entrepreneur to spend money that they don't have to put the company into bankruptcy, because it won't do them any good whatsoever. Now, the next situation is where the business is still operating, it is insolvent, but it is viable. People still want the goods or services that this company provides. And perhaps there's an investor or a purchaser who is willing to either invest money or purchase the assets to continue the business and continue employment for some or all of the employees. But they won't put money in in order for the money to go to pay old past debts. So in that case, it makes very good sense to either do a restructuring proposal in order to have a sales process, get a court order that vests the assets out of the old sick corporation into the buyer's new healthy corporation, and to have the money to distribute to unsecured creditors and for employment for many to continue. Or it may make sense to have a bankruptcy to do the exact same thing. So in the case where the business can survive and there's a mergers and acquisition transaction that can take place, an insolvency proceeding, either a proposal or bankruptcy, makes a lot of sense. There's also the situation where even if the business has to shut down, it may have some value. Corporate bankruptcy is not a simple process. It's somewhat complex. You need a licensed insolvency trustee, and you need, for the company and for the directors, an insolvency lawyer. And this, of course, costs money. But if there's value to be obtained through the sale of assets, then it may very well make sense to explore the bankruptcy area. This is especially true where you might need a bankruptcy in order to preserve the value of certain assets. The most common example of this is in retail stores, where a trustee in bankruptcy has certain rights not available to the tenant who is in arrears of rent. Combination in Ontario of the Commercial Tenancies Act and the Bankruptcy and Insolvency Act gives the trustee the right to occupy the premises as long as they pay rent for 3 months, and also gives the trustee the right to assign the balance of the lease term. So, if you want to run a good liquidation sale to the public out of retail stores, you need to be able to solidify and secure the retail premises. So you would need a bankruptcy for that. As well, perhaps the lease is under market, and there's therefore value in it. The market value of the rent today is much more than the lease rent that's called for both this year and in the remaining term of the lease. So someone may very well be able and willing to pay the trustee money to get hold of that lease in order to have cheap rent for several years going forward. That is another situation where a bankruptcy may very well help. Finally, the checklist. What are the things that an entrepreneur should do in closing down their business? Down below, Brandon provides his checklist of things that an entrepreneur should do. In the self-help remedy, here's the list of things. Let the utilities know that the business is closing and a final meter reading should take place. Prepare and issue all records of employment and send them out to the former employees. Remove the books and records, which are probably computerized, from the business premises so that when the landlord takes back the premises, the company's books and records are secure. Advise the bank, your lender, that the business is shut down, it can't pay anymore, and you're providing the keys to the banker so they can go deal with their security. If there is no bank lender and no trust claims, maybe you can hold a going out of business sale. Once the going out of business sale is finished, Tell the landlord the business is done and hand the keys back to the landlord. Cancel all insurance policies. Perhaps there's money coming back to the company through an unearned premium. Redirect the business mail to a different address that you control. Most of the mail will probably be bills, but there may also very well be checks coming to the company. Cancel all corporate credit cards. Collect on the accounts receivable of the business. Deal with the termination of any business licenses or permits and return them to the governing bodies. Deal with your business social media accounts. You may want to shut them down totally. You may want to put a notice that the business is closing, but deal with them in some way. What about the web address, your website address, the URL? You may want to park it to use in the future. It may have value today to someone else, so think about what the way of extracting the best value out of your URL is. Make sure that the final financial statements, tax returns are prepared and filed with the government. If there's tax owing, of course the company won't have the money to pay for it. HST is a director liability. Unpaid wages and vacation pay is a director liability, but unpaid income tax is not a liability. At the appropriate time, prepare and issue the final T4 statements of remuneration paid to the former employees. And of course, you'll be doing the annual return to figure out if there's any further money owing to the government. Calculate, prepare, and file the HST return. If there's a balance owing, the director will have to make a decision whether or not to pay this, because again, unremitted HST is a director liability. Maintain the books and records of the company. Canada Revenue Agency may want to perform an audit. Send a letter to all your creditors, all your suppliers, advising them the business had to close down, that you've enjoyed the relationship over the years with them, that unfortunately there is no money to pay them, and make sure they know that you too, the entrepreneur, you have also lost money. It's not that you made away with huge profits and left them holding the bag. Also send a letter to your customers. Tell them of the business closure and tell them how much you've appreciated their loyalty and enjoyed the relationship with them. That is the checklist of things we tell entrepreneurs to do when they shut down their business. So I hope you've enjoyed this Closing a Business Brandon's blog. Again, the Ira Smith team hopes that you and your family remain healthy, safe, and secure. Both Brandon Smith and myself are available at any time by email, telephone, video meeting to answer any questions you may have about this Brandon's blog or anything else. Shoot us a message, give us a phone call. We would love to hear from you.